basic principle behind designing your own financial statements, you have two things you need to define. You need to define the rows of your financial statement. For example, in a P&L, if it were an overview, it might be just income, cost of sales, gross profit, expenses, net profit. And you need to define the columns that you're going to be reporting on, which might be monthly, quarterly, annual, and calculated. Let's start by looking at the rows. So if we go down to the financial statement generator and we look at the makeup of financial statements, you'll see that I've already defined a couple of different ones. If we look at the very simplest one first, the summary P&L, you'll see that I've created top level income, cost of goods sold, gross profit, expenses, net profit, a little bit of control over whether it's a credit or a debit, and level of the detail that's actually in use. I've also created a more detailed variant. If we look at that definition, you'll see that there are a number of rows making up income, for example, and then income is totaled, and then the same is true of cost of goods sold and expenses. And that's all you need to do in order to define your rows. You have the ability to create expressions that can do simple calculations, such as adding income and cost of goods sold to reach a net profit. And you can also introduce blank lines and, as you can see, heading lines and a number of other factors to lay out the rows of your financial statements. The second component of building your financial statement is to use customized columns or configured columns. And you can define a column pattern by going down to the definition of column bars form. So that is where we can then create the different column bars that we're actually going to use. So in this case, I'm going to create a series of monthly P&Ls. So I'm going to then specify the columns themselves. So in this case, January, and you need to define a type for each column. And if it's a P&L type, you're going to be using a period total. And then I just need to define the date range that I'm going to be using. And if we show a second, and then I'm going to shut up and just enter everything. So just to pick up the end of that story, if we look at our monthly column definitions, we've got each of the months with the period totals and the date ranges to which they relate. Notice that we've got control of recurrences, and this is a multi-company form where you can define one or more companies within the definitions for your columns. So this could be a completely consolidated series of accounts. That was the definition of monthly, but if you look at quarterly, it's just another definition, but as you can see, different date ranges. So two different sets of columns that we can apply to any of our financial statements. So then, to complete looking at the effect of configuring your own financial statements, we actually want to run the reports that we've actually just created. So that is by running the financial statement. And what that does is it gives you the chance to select ones you've run before, but I'm just going to go ahead and select the default. And as you can see, it gives me the choice of the configurations for the rows that I've set up. So if we start with a summary P&L, then the second thing that it will ask you for is the definition of the columns that we've set up. So I've got an annual, a current year versus prior year, monthly, quarterly. If I just look at the quarterly, for example, then it'll run. The data is, I'm afraid, rubbish, as you'll see in a moment, but you'll get the basic principle from looking at this created financial statement, which is just a very simple summary of the overview of the P&L for each quarter. If we go back and then run it again with one of the other configurations, you'll see how easy it is just to pick up another set of definitions. So in this case, we'll run exactly the same thing, but in this case, we will select the original monthly more detailed, the more detailed set of rows, and then we might pick up, for example, monthly. There is no data in the monthly, but we'll run it anyway so that you can see that at least we get the 12 columns. And there's our detailed monthly breakdown of each of the analyses that we've created. So to complete our understanding of how these financial statements are working, let's understand the way the drill down applies. I want to see the breakdown of this 3,100 odd. I can drill on the account itself, which will take me into the account detail. And if I drill into the account, which is the general ledger account, I've got subforms for year to date, or I was actually running this for prior year. So these are the transactions that made up that 3,100 balance. I could look at it also in multi-year so that I can see all of the transactions across any date range. And remember that it's very easy to pull this information out, for example, directly into Excel.